The Federal Reserve is considering another interest rate hike tomorrow. And we've told you before, these moves are an effort to drive down inflation. But analysts say these hikes could also be causing some of the turmoil we're seeing in the banking industry right now. NBC's Alice Barr looks at what this all means for the economy.
An economic tightrope act has the Federal Reserve balancing its core mission of lowering inflation with the impact of aggressive interest rate hikes on a banking industry in turmoil.
There have been questions as to whether they might pause, take a beat, and say, let's pick this back up at the next meeting. But the market still expects a smaller rate hike.
The Fed's interest rate decision tomorrow follows a months-long campaign of rate hikes that has lowered the value of investments. That puts pressure on smaller banks, contributing to two recent collapses and industry moves to increase stability. Treasury Secretary Janet Yellen saying today the federal government could act further to guarantee bank deposits are safe.
The U.S. banking system remains sound.
Persistent interest rate hikes have also had a significant effect on the housing market. The National Association of Realtors released new data today showing home sales spiked in February for the first time in 12 months as prices dropped year over year for the first time in nearly 11 years.
For a home buyer today, in comparison to a year ago, it's a better market for them. They have a higher interest rate, but they may have more of a chance of having that offer accepted.
The mixed outlook comes against the backdrop of President Biden's expected re-election run, with Republicans blaming him for economic uncertainty, and the latest NBC News poll showing just 36% approval of his handling of the economy. The White House seeking to calm nerves and show a steady hand. In Washington, Alice Barr, NBC News.